So what is a special limited partner? You often hear this referred to when you're talking about a fund or setting up a fund. Do you need a special limited partner? What is a special limited partner? So I'm going to show you a little and explain a little bit about what a special limited partner is and how it's used. So let me share my screen to show you some organizational chart or chart of funds. So the one that you see on your screen right now, this is sort of a typical fund structure. Some people do them the reverse, where the assets on the bottom and ownership is on the top. This one here is the assets are on the top. Investment assets is, what is the fund investing in? This could be securities that you're buying, stocks and bonds through a brokerage account. It could be a real estate asset. Whatever the asset is that's owned that you're investing in is up here. In gray is the fund itself, whether it's a limited partnership or a limited liability company. This owns the assets. That's the owner that holds title to the different assets usually. Then down below, you have limited partner, who are your investors that are giving you the cash to put into the fund. The GP or general partner over here is usually set up as an LLC, and that's the general partner that makes decisions and manages the fund typically, and that is owned by sponsors who are the people who put the deal together. And that's sort of a typical common fund structure. Now, when you add in, this shows you adding in a special limited partner and also a management company. So now let me explain why you would do that. So the general overall structure in the middle is the same. However, we've added something on the right and something on the left. On the right, management company as an LLC, in some cases, the fund will enter into a contract with an investment manager who makes the decisions, basically what to invest in. Let's say it's a hedge fund, and the investment manager decides what stocks to buy and sell. That's either done through the general partner, or it could be a separate management company as an LLC over here, which could even be owned by the same people, the sponsors that put the deal together. And there might be a contract between the management company and the fund, but there's no ownership relationship. And this is done, sometimes it's because the investment manager maybe is a registered investment advisor. They have a separate company for that. So they set up a management company that is the investment advisor, basically handling investments for the fund. And it kind of separates the roles between the general partner and the investment manager, who decides what to invest in versus managing the fund itself, which is the general partner. Now, the special limited partner off on the left, oftentimes that can be individuals or another LLC. And the reason for this is it's a limited partner similar to the ones in green over here. Basically, it's still a limited partner of the fund, and maybe it's a separate LLC that's owned by the same sponsors as the general partner. However, the flow of funds coming out of the fund itself, so cash coming out, is going into two different buckets. So let's say you're doing a 2 and 20, which is a 2% asset management fee and a 20% profit split or carried interest. That's kind of common on a lot of funds, hedge funds, et cetera. So the 20% promote or carried interest gets paid over to the special limited partner entity and then distributed down to the owners of that limited partner. The asset management fee or investment management fee would go down to the general partner, the 2%, and then it would be split down between the owners of that LLC. This kind of basically for tax purposes, it separates things out. Also for asset protection, if the general partner got sued for breach of fiduciary duty because they didn't do something right for the fund, it keeps those sort of that carried interest completely separate, which is sort of your future profits, separate from the actual managing entity, so that if the creditor gets a judgment against that LLC, it's a little bit of additional firewall, I guess you'd call it, between those entities. Also, a lot of times we'll set them up to where if something happens, so you have the general partner right here, and let's say my client is sponsor one and sponsor two, and they're running this general partner entity. they do something wrong, or for whatever reason, the fund or the investors vote and decide, hey, you committed a felony, or you did, usually it's because you did something wrong, and they have the right to remove those individuals as the general partner. Now, in basically, usually what the fund will say is, okay, these sponsors may come out of this general partner entity, no longer have a right to receive the 2% asset management fee or have any control over the entity. And these would go away and basically be replaced with somebody else. Then, but special limited partner over here with the same sponsor one and sponsor two would still retain their profit interest in the future. So that they would still, for the work that they've done so far, they would still get that carried interest going forward. That wouldn't disappear. And they would basically be a passive limited partner. And that's another reason for that special limited partner entity over there. So that's just a general overview of special limited partners. Sometimes it can have some tax planning strategies to it, or asset protection, or just general planning. Overall, it's not required in most cases, but sometimes it is just a good added feature to add in to your fund.